The euro is buying near 1.1600 as the market prepares for German ZEW and US CPI data this week. A pullback from last week's highs is healthy. But how far will it go? Let's analyze. First, we have to admit that last week was a very strong one for the euro. Not only did it break above 1.1700, it even hit a high of 1.747, the highest level since April 2018. However the market started, the euro is easing towards 1.1600 ahead of the German ZEW and US CPI data. The market is currently pricing in a 70% chance of a 50 basis point rate hike from the Fed in May. However, recent comments from Fed officials suggest that they may be about to slow down the pace of their tightening. In fact, in a recent speech, Fed Governor Lael Brainard said that a slower pace of rate hikes would likely be appropriate at some point. Of course, this is all priced into the market, and any upside CPI prints could see the Fed take a more aggressive stance, pushing back against the market's current expectations. In terms of the euro, we have German ZEW data out today, and a higher-than-expected print could see the euro rise above 1.6600. But with the recent sell-off in risk assets and the war in Ukraine still raging, it's hard to see the euro strengthening much higher. Overall, the global risk-off sentiment is weighing on the euro, and the pair is likely to remain under pressure in the coming days.